Welcome back to Financial Therapy. It's not just about the money. I'm personal financial planner, columnist, and financial therapist Rick Kahler. Research tells us that 90% of all financial decisions are made emotionally, not logically. For nearly 4 decades, I've been helping people make better money decisions. So what makes my financial worldview different from most financial experts? I blend the nuts and bolts of financial advice with the emotions that drive making them. Good money decisions are not just about the money. So let's get started with today's episode. Welcome back to another episode. In a recent episode, I talked about just the emotions involved in investing. I think the name of the podcast might have been something like My Portfolio Has Fallen and I Can't Get Up, or It Can't Get Up. That's, of course, getting a lot of attention right now. And something that's been getting a lot of attention in the financial press recently is something called cryptocurrency. And so I came across some research that was fascinating around what type of personalities invest in cryptocurrency. And it's kind of fascinating. So let me give you just a little bit of background in crypto first before I get into that, so that you know what it is I'm referring to. Cryptocurrency is one form of digital currency, and that is money that exists only in electronic form, which may or may not be controlled by a country's central bank. I think there's 16 countries, including China, that are in the pilot phase of launching a cryptocurrency, and 15 others have them in development. So, say, encompasses a broader spectrum than just Bitcoin or Ethereum, which are the two most popular cryptocurrencies. And a cryptocurrency is a currency, a unit of encrypted data, all right? It's created, which they call it being mined, by computers that solve really complex digital problems. And there's a computer network called a blockchain that maintains the currency, the security of it, records transactions, and limits the creation of new currency, therefore giving it some stability, although that's a very poor word to use for cryptocurrency. But for instance, if anybody could print US dollars, the currency would have no value. So it's the same thing with the digital currency. Virtual currencies are always unregulated and controlled by their developers. So Bitcoin is a virtual currency. And as I alluded to previously, a central bank digital currency, also called a CBDC, is created by a country. All right. I'm sure I have just bored a number of you, but I do want you to understand what we're talking about here. And it doesn't look like cryptocurrency is going to go away anytime soon. There are advantages to having digital currency. Some of those are that the transactions are fast, right? There's no banks, no clearinghouses. Payment is instantaneous, rather than when you write a check or you do a bank wire. It can take several days, sometimes even weeks, to work through the system. This also makes international transactions a lot cheaper. If you've ever tried to convert your dollars into euros or vice versa, you'll know that there's often at least a 3% conversion charge to convert. None of that exists with a cryptocurrency. And another advantage is, unlike physical currencies, a digital currency can't be physically destroyed, misplaced, or lost. Now, you can misplace your passwords. And in that regard, you can lose them. But it's not like you can. I once lost $2,500. I got paid once, and I put it in cash, and I lost the $2,500. And there was no way to recover it. There was no password that would bring it back. And then the last advantage of crypto is that the transactions are private, so they don't go through any banking system. Now, there's also disadvantages to cryptocurrencies. The biggest drawback is the extreme volatility of their price. Now, all currencies fluctuate. If all you do is use dollars, you rarely see those fluctuations. But if you travel abroad, you go to Canada, Mexico, to Europe, you can see that sometimes, like I've been in the UK, where a pound, the pound, 1 pound, would buy, was worth $1.65. So I would need $1.65 to buy one of their units, 1 pound. That we've seen that fallen in recent years to $1.15. So if I visited Britain again, when it was $1.15, it only cost $1.15 to buy one of their units, making travel to the UK for me a lot cheaper. The US dollar fluctuates typically between 0.1 and 0.5% daily. The average daily volatility of Bitcoin is 3.03% to 6.06% a day, which is 6 to 60 times higher than the volatility of the US dollar. So here's the deal about a currency. Currencies are somewhat of a storehouse of value. They need stability. You need to know that your dollar today is pretty much worth $1 tomorrow. Now, inflation does erode the purchasing power of currency. We're seeing that currently. But if prices fell or rose 3 to 6% a day, this would make things very volatile. It's not, that no longer becomes a currency. A currency's got to be stable to have value as a medium of exchange. So digital currencies today are a real poor decision to transact your business, your purchases with. Another disadvantage is if you don't have internet connection, you don't have currency. And we all lose cell service from time to time, or Wi-Fi, right? And like I said before, if you forget or lose your password, you are out of luck. So with that foundation in mind, I've warned against then investing, which is really speculating in cryptocurrencies, since 2017. I don't think digital currencies have any place in any conservative investment portfolio. They need to be looked at as risky speculations, and never borrow to speculate in virtual or cryptocurrencies. And don't commit money to them that you are not totally comfortable in losing. And sometimes we just underestimate that because we say, oh yeah, I'm okay losing that, and then we lose it, and we find out we were not so comfortable. In, say, between April 13th and May 20th, the price of a single Bitcoin went from a little over 63,000 to a little over 29,000. That's a loss of 65% in 13 months. That's huge. That's a crash. That's beyond even the outside crash of most bear markets. Now, in contrast, if you had a diversified portfolio that I've talked about before, how much do you think in that same period of time that that portfolio lost? 0.5%. 65% to 0.5%. All right? So this really highlights the volatility that's so common with cryptocurrency. I would suggest that no evidence-based long-term investor would include such a speculative gamble in their portfolios. And we've talked a lot about cognitive biases that might be involved in us including such risky stuff in a portfolio. So all this kind of makes you wonder, well, what type of personality signs on for such violent volatility? And I read a study by Wang, Martin, and Yo in social psychology. And they surveyed 566 investors to find out what the commonalities might be amongst crypto investors. They gave them a personality test. They asked them if they invested in crypto or planned to. And of their sample, 26% currently owned crypto and 64% showed an interest in crypto. Here's what they found. And this isn't going to amaze you. They found that people who own cryptocurrency are people drawn to high-risk investments and a distrust in government. Well, that makes sense, right? Because one of the advantages of crypto is there's no paper trail. And there's, in virtual digital, there's no government involved. So then they went a step further and they assessed these individuals to see if there was any commonality of personality traits. What they found was pretty amazing. These speculators, and I just hate to call them investors, right? I've talked about 3 phases of wealth accumulation: saving, investing, and speculating. And so many people jump from saving, which is like cash in the bank, to speculating, which would be crypto, get burned, and then say, I'll never invest again. Well, they never invested in the first place. Investing is boring. So these speculators, while saying they were investing for the hope of high returns, were speculating in cryptocurrency for reasons that weren't just about the money. Imagine that. It's not just about the money. So these speculators all held personality traits in what psychology calls the dark tetrad, T-E-T-R-A-D. Maybe it's tetrad. I don't know. It's a word I've never seen before. And this dark tetrad is a group of 4 personality traits. And those 4 personality traits are narcissism, psychopathy, Machiavellianism, I can't even say it, Machiavellianism, and sadism. I probably should have figured out how to say that word before I recorded a podcast. Oh well, this is fairly unscripted, right? It's just a chat that we're having. So they looked for common themes that might connect this dark tetrad to personality traits in crypto. And they found that there were 3 common themes, right? First was FOMO, fear of missing out. The second theme was optimism. And the third was a belief in conspiracy theories. So these were the popular themes. So let's look at each one of these. The researchers found that narcissists who tend to be self-centered and experience feelings of privilege and predominance over others tend to like crypto because they are confident that their decisions are better than the decisions of others. Now, I've done a podcast on cognitive bias, and the cognitive biases involved here are overconfidence, delusion, and narrow framing. And I just won't get into explaining those here. You can go back and maybe listen to that podcast to get a little bit more. But it's that super confidence, overconfidence that they are going to be right. And the folks that I've worked with that have owned crypto to a person are absolutely confident it's going to work out. In some cases, even to the extent of borrowing money, and some have borrowed millions of dollars to invest in crypto, only to have watched the crypto fall 65%, and now they're way tipped over. They owe way more than what their crypto is worth. And the deal is, because of the overconfidence, this person doesn't know when to walk away from the table. My mentor in financial planning loved to gamble, loved blackjack. And he played it very scientifically, because with blackjack, every hand has a right decision. It's not really, it's chance, but there's a right call on every hand you own based on statistics and probabilities. And I was with him in Las Vegas once, and I have a pretty low tolerance for loss. And I think at that time my tolerance was probably about $10. We went and played blackjack at the tables, and we were up $40. And he said, when we're up $40, it's all over. We're walking away. And that's exactly what we did. And we didn't gamble a penny more that night. And this is how he would approach it. He had an amount he would lose. It was entertainment. It was money he was happy to spend for the experience. And when he lost, he'd walk away. Well, a narcissist can't do that, because walking away when they're down, of course, means they lose, and that is just unpalatable. When they're winning, they can be confident they're going to even win more. So it can become very difficult. The next personality type is psychopathy, which according to the research is a callous and impulsive antisocial personality trait. So psychopathic parts of people often find it difficult to perceive or understand or address emotions, right? There's a lack of emotional intelligence and empathy. So this makes them pretty reckless. And that recklessness makes them more resistant to stress and anxiety. Because believe me, when your investments are popping around at 65% up or down, there's a lot of stress and anxiety. So psychopaths like stimulation seeking and risk taking. They're prone to gambling and gambling addiction. And while this includes the cognitive biases of overconfidence, delusion, and narrow framing, like narcissism, it also includes confirmation bias and FOMO, fear of missing out on the investment rewards that others are experiencing. The Machiavellian tendencies, that doesn't sound, it's an Italian name. I don't think I'm pronouncing it very Italian. These folks are good at deception and interpersonal manipulation. So they strongly believe in government conspiracies, and they like crypto because they think that politicians and government agencies who control the dollar and other fiat currencies are inherently corrupt. So this really appeals to them. Sadism relates to a personality that enjoys another person's suffering. And sadists often are aggressive and exhibit cruelty. Now, buying crypto doesn't seem like it's likely to harm others. But the research found that sadists like crypto because of the fear of missing out on investment rewards. So it's possible that the sadist, that both the pleasure from seeing another person's pain and the fear of missing out are somehow related to watching the crypto markets and selfishness. So I found all that pretty interesting, pretty fascinating about these parts of ourselves. And I don't mean to be a diagnostic and relating that this is what a person is. We know from an IFS lens that these are all parts of ourselves, and parts of ourselves that exhibit these tendencies. And so there is certainly a hope. Just because a person exhibits these tendencies and parts of themselves does not mean that's who they are at their core. And it doesn't mean that they can't work to help heal and unburden these parts from their trauma. Because we know under every financial behavior that's hurtful, that there's a trauma. And so it's simply working with these parts of ourselves to understand what their underlying trauma is and helping them unburden these traumas that can then change these hurtful financial behaviors and bring about equilibrium financially to the system. Also, I don't want you to assume that everyone who invests in cryptocurrencies falls into this dark tetrad. If you're curious, if you have these three of these traits, there's an assessment that you can take, and it doesn't include sadism. It includes the other three. And I have this in writing, both on my blog, and it'll be on the blog on this podcast. But the address is openpsychometrics.org/tests/SD3/. Okay, that's openpsychometrics.org. That's open, psychometrics.org/tests/SD3. Can get on there and take it. I took it. Fortunately, I ranked in the lower 10 percentile or less on each. I was glad to see that. And that's probably why I don't have crypto in my investment portfolios. And quite frankly, I have never owned crypto. I thought about it just to have the experience and understand what it's like to own it. And at some point in time, I probably will. And I probably would own a digital currency that is stable, right? And maybe if the U.S. government ever comes out with a cryptocurrency, crypto U.S. dollar, that would be something that I would consider holding for all of its advantages. But it's not a place to make money. It's currency. We don't own currencies as an investment or to make money. So today, the cryptocurrencies represent a huge speculative gamble. At the same way of owning a futures contract. And probably futures are even less volatile than cryptocurrency. So the bottom line on this may be that self-led, self-aware people, or people that have more self-awareness, because we are never 100% aware, they don't invest their long-term portfolios in cryptocurrency. They prefer a lack of extreme excitement in their investments. They prefer boring when it comes to their investments. So those that do hold cryptocurrencies, especially when they're borrowing to invest them and investing large portions, even moderate portions of any net worth in them, absolutely have a part of themselves that enjoys walking an investment tightrope. And not only is it a tightrope strung over the Grand Canyon, there are extremely high wind conditions. And it usually just doesn't end well. So, hope you found that interesting. I appreciate you listening. And as always, I welcome your feedback. And you can always email me at rick@rickkahler.com. So take care, and I will look forward to having another episode for you next week. Bye now. Thanks for joining me, Rick Kahler, for another episode of Financial Therapy. It's not just about the money. This is where I combine the nuts and bolts of financial advice with the emotions that drive making them. Remember, every financial behavior, whether it appears illogical to you or others, makes perfect sense when we understand the underlying beliefs, feelings, and thoughts. Sign up for my weekly blog at financialawakenings.com. I hope you'll join me again for our next episode.